It's been an interesting couple of days for the S&P 500, stock symbol SPY. We had a huge breakout on Friday. Man, we were breaking out of a 13-day consolidation. Things looked really promising. I got stopped out of my short positions, went completely cash, but I didn't add any new long positions for this upcoming week here. I wanted to see how we followed through today. Well, we got that follow through early on, but then it spent the entire afternoon giving up all of those gains and never even saw a single bounce. Now, what can we really expect from the market going into tomorrow's speech with Jay Powell and then Thursday's CPI report? What is the technicals looking like? And I also want to look at the weekly chart too, because it takes a lot of noise out of the equation, can give us a little bit more perspective on the market from a longer term time frame. So let's go ahead and look at that technical analysis here. Let's look at the daily chart starting off. But first, make sure you click the join button down below if you want to get more of these videos each and every day sent to you. I do a couple of them every day for YouTube members. They're really awesome. You're also going to get my watch list and a number of other posts as well, specifically for members of this YouTube channel. So check that out by clicking join down below. Now let's look at the charts here. First off, SPY daily chart. We got this downtrend, and I think almost every one of my videos over the past year has started with this downtrend because it is so significant overall for this market. If this market's ever going to reverse and ever going to actually change the tide, change going from a bearish to a bullish market, it's got to break this. And it's pretty close to it. It actually got within about 1.5% today. But then you got that heavy sell-off, which puts a lot of distance in between it and now going into the rest of this week. So this consolidation here, this is really what was frustrating a lot of traders here. This consolidation here lasted 13 days. We got the breakout though, and that was a big deal here on Friday. I'll zoom in a little bit so you can see it. We broke out of it, and then we get that follow through. But what's even more interesting is the fact that we can't seem to break above this 50-day moving average. If you look right here, we tested it, we sold off. We tested it, and then we sold off. And again, we got up to it on Friday. We didn't break through it, but then very similar to the price action that we got here back on December 21st, we got right up to it. And then today we actually broke above it, but couldn't hold it, and we sold off. So now we're trading just below it again. Now we haven't given up this breakout level. So that's a key important part of this whole equation here. However, this declining trend line is very significant here. We got to break through it. You also have this double top pattern, and though we might have forgotten about that, this was a double top pattern off of this rising trend line. So where things get really interesting is that this is where the double top pattern confirmed it. You can see there's multiple points of resistance and where it's bounced off of this level here. We broke through it. Essentially, the difference between this 23-day consolidation pattern and this 13-day consolidation pattern is about 1 day to the downside. This day right here that separated us out of this consolidation and put us into this consolidation. So now we rally back up to it and we touch this resistance level overhead, but we're not breaking through it. So you got to really wonder, are we just doing a 2-day dead cat bounce here? Actually, not even a 2-day. It was like a day and a half of a dead cat bounce. And now we're falling right back into this consolidation range. If the CPI comes in hot or Jay Powell gets hawkish on Tuesday, and there's a good chance that he will, simply because every time they get dovish with their words, the market rallies, and that hurts them because it actually eases the financial conditions, which is the exact opposite of what they're trying to achieve here. They're trying to tighten the financial conditions. They're trying to take some money out of this market. And so every time the market rallies because they think that they're going to cut rates soon, it actually extends it further out when they're actually going to do that. So the market trying to be so forward looking is actually making the job of the Fed much more difficult. So we got price going right up to this resistance here, selling off. Then if he starts to get dovish, or actually hawkish, you can expect, I would expect at least, a break below this consolidation range. And then you're starting to look at the previous lows here, down here from November. Can we take out the lows at 368? And if that happens, then you have some serious support that comes into play right down here in the 350. So that's what I'm watching for in the days ahead. Now, if he comes in dovish, CPI number comes in light, then you could see a rally. But I think where you're going to see a lot of resistance is at this trend line. This line right here, or this candle right here, this was the previous CPI report. And what happened? We went way above it. We broke out above it. It was the first time really that we've seen any price action outside of this declining trend line. And this is the CPI report. It came in very light. Everybody was excited about it, and it faded. This was just last month. So just because we get it, and just because we break above it intraday doesn't necessarily mean we'll close above it intraday. Just look at the last time we had a CPI report. So keep that in mind. Now let's look at the weekly of this, because I think it tells also a pretty interesting story. It takes a lot of the noise out of this equation here, and you can see how methodical on a weekly basis this sell-off has been. The one thing that hasn't happened here with this particular sell-off of late, when we saw in December, is that we didn't make new lows. You used to see a lot of heavy selling to the downside that would ultimately take out those lows, and in this case, we were maybe expecting it to take out this support level or at least touch it to create a new low. That didn't happen. Instead, we saw the sell-off kind of stall out over the last 3 weeks. But again, with the CPI and with Jay talking tomorrow, there's a chance that you could see this thing resume to the downside, and it would make more sense on a weekly chart for it to do that. But keep in mind though, this resistance level is right overhead. So if you start getting long, you don't have a long ways to go before you start running into some heavy resistance on both the weekly and on the daily chart. Finally, let's look at the VIX here. VIX has been really interesting to me. I mean, really fascinating. First off, you got this huge level of resistance overhead. It's like at 33, 34. Every time we've had a major sell-off this year, and over the past couple years actually, it tends to hit this resistance level and then significantly pull back, which causes a bottom to be put into equities and into the indices, and for them to rally as a result. We haven't touched it in a long time. I mean, we're talking about since October. Now, when you look at the daily, though, this is where it gets a little bit more fascinating. Look at that. Look at that declining trend line right there. That goes all the way back to the October highs. Now, this trend line, the reason why it's significant is that it continues to bounce off it, but it can't break through. We actually saw, and this was one of the red flags for today, is that you saw the VIX gap higher despite the market trying to rally right out of the gate today. The VIX gapped higher, and it held its gains, and it's right below this declining trend line. So there's a good chance that if you can actually get a close above the declining trend line, that would be your signal really for getting more bearish on the equities and on the market overall. Going back to SPY one more time, because I forgot to tell you guys something that I wanted to point out. This is the weekly chart. Look at this 200-week moving average here. You see this here? I'm going to point it out for you here so you can see exactly what I'm talking about. Prices consistently bounced off of this 200-week moving average. Time and time again, we continue to bounce off of it. Here in 2016, you also had 2011 right there. Then you also had 2020, the March 2020 sell-off, and right before that you had the 2018 sell-off where it bottomed in late December, and then of course we touched it again in October for the first time, right? And we've bounced ever since. We haven't taken it out. It doesn't mean that you can't get some price action below it, but in general, over the last 10 years, this has been a huge level of support for the market to finally put in a bottom at. If this gets taken out in the near term, and it's not that far from being challenged again, that would create a drastic shift in the perception of the market going forward. And I think you could see some panic selling really start to ensue as the market would start to get into uncharted waters over the past 10 years that it really hasn't seen. So there's a lot to be watchful of in the days ahead. I think there's a lot going on with the CPI report and with Jay Powell's comments on Tuesday to be mindful of. And we don't know exactly how the market's going to react to it. Nobody does. And people who try to act like they do, they don't really know. They're just guessing and trying to chase clout, hoping that they'll be right. But anybody being honest with you, they'll tell you, nobody knows how the market's going to react. So our job's not to predict it. Our job's to react to it. And I say that all the time, and I hope that by continuing to say it, it'll make sense to you guys. So keep that in mind. This is some pretty turbulent times that we're trading in. 2022 was crazy. 2023 might be even crazier. So we'll wait and see. If you enjoyed this video, make sure to like and subscribe. Tell me down in the comments below, what are you expecting out of this week? How are you positioned in this market? I always love to hear how you guys are positioned. Are you guys long? Are you guys short? Are you guys in cash? Right now, I'm 100% in cash, just waiting for the next move to unveil itself so I can take advantage of it. Thank you guys, and God bless.